Okay, we've got question 5. Kiwi Adventure Proprietary Limited purchases equipment on the 1st of October 2009 for $80,000 cash. The useful life of the equipment is expected to be 6 years. The residual value of the equipment at the end of the useful life was estimated to be $9,412. The reducing balance method is used to calculate depreciation and expense at a rate of 30%. Okay. On the 30th of June 2010, the fair value less disposal cost of the equipment was $73,000 and its value in use was $78,000. On the 30th of June 2011, the fair value less disposal of the equipment was $52,000 and its fair value in use was $55,000. On the 1st of July 2011, Kiwi Adventure Limited sold the equipment for $35,000 cash. Alright, prepare the journal entries to record all the above transaction and events relating to the equipment for Kiwi Adventure Proprietary Limited, and the entity's balance date is the 30th of June. Show all workings necessary. Alright, first thing we need to do is calculate the depreciation, and we calculate it using a 30% rate. So let's have a look. My first date is the 30th of June 2010. When did I buy it? 1st of October 2009. So I've got what have I got? October, November, December, January, February, March, April, May, June. So I've got 9 months. Okay. So my first depreciation calculation, I'll do the depreciation calculations first before I do it. I've got $80,000, which is my cost of my asset, times 30%, which is my reducing balance, times 9/12, which is my months. Who's fast on the calculator? 3/8 of 24 by 3/4 of 24 is 18. $18,000. Now, my value here minus my $18,000 will give me written down value. So my next, this is 30th of the 6th 10, and then 30th of the 6th 11 will be 80,000 minus 18,000 gives me 62,000. So I'll have 62,000 because I'm using reducing balance times 30% equals how much? 62,000 by 18%, 6 3 18, 3 2 6, 18,600. So therefore my my value will be 62,000 minus 18,600 equals 43,400. So that's my value. My fair value in use was 52,000, and my fair value in the disposal cost of my equipment was this, and my fair value was this. So I record it at the lower of the cost, or net realisable value, so it's recorded at this cost. That's all cool. Now I need to do some journal entries to record all this. So let me just zoom out. Okay, so I need to now record this journal entry. So at the 1st of the, when did I buy it? 1st of October 2009, I purchased equipment at cost. That's supposed to be a net, and that was 80,000. Now it doesn't tell me any difference, so I'm going to assume I paid cash for this. $80,000. Now at the 30th of the 6th 10, I'm going to recognise my depreciation, and my depreciation was $18,000. So my debit entry is my depreciation expense. on my equipment is 18,000, and my accumulated depreciation on my equipment, no, it's 18,000. I've got to make sure my journal entry balances. So that's my second journal entry. Now, what I'm looking to do is now record my third journal entry, or my depreciation for my second year, which is the 30th of the 6th, 11. It's exactly the same line items as before. So I've got my depreciation expense for my equipment. This time it's 18,600. And my accumulated depreciation is 18,600 as well. And then it said on the 1st of July we sold the equipment for 35,000 cash. So now I need to remove the equipment from my ledger, and I need to remove all the accumulated depreciation as well. So,
Cash goes up.
Yep, cash does go up. Let me just use my textbook as a continuum. So my disposal on the 1st of the 7th, 2011, I'm going to record cash at bank of 35,000, which is the value I sold my equipment for. Well, you can't see it, actually. Why not? It's 35,000 there.
So what is all that stuff? 73, 78,000, 53,
Yeah, did you read the chapter? No. It's just, all it is just we need to value at fair value or in-use value, whichever is the lower. And in all instances, my value as my written down value was always lower, so it's the one I have to recognise. Now I need to reverse my accumulated depreciation. And my accumulated depreciation is my 18,000 here plus my 18,600 here, which means I've got to get debit now of 36,600. Now my written down value was 43,400. And I sold my asset for 35,000, so that means I'm going to make a loss on my sale. Well, actually, let's just put in equipment cost. So my equipment cost was 80,000. So therefore my loss on sale will be 35,000 plus 36,600 minus 80,000 will leave me with 8,400. And I'll show you how I calculated that. It's my 80,000, which is cost, minus accumulated depreciation of 36,600 equals 43,400, and then proceeds minus written down value, which is 35,000 minus 43,000, oops, you can't see, 400 equals a loss of 8,400.